Mr. Bagga, what's happening to the markets? We reach fresh high levels and then this sudden bound of profit booking comes in. Do you think we are close to the top for the year or at least for the first half of the year?
Difficult to say that, but I think the big trend is that foreign investors have been selling as a cohort. Within that, there are different types of investors, of course, but FI selling is one characteristic of this market. Second, emerging markets have been hit by the Chinese market underperformance. So, as the Chinese market hopefully bottoms out, and more flows start wending their way towards the emerging markets, we will also see a reversal of this trade. So that's the first thing. Second is that our valuations were never cheap. Valuations are still a bit on the higher side. And so, despite getting a bigger share in the global indices, we are not getting that kind of inflows yet because there is a wait and watch with the foreign investors. And third is the big event coming up, the national elections. Of course, the market consensus is political stability, political continuity, but still there is a segment of investors who would like to wait and watch. So that's the big theme, 30,000 feet and more granular. I think banks have underperformed and they're a big chunk of our market. That has led to some underperformance. And IT. IT still has a question mark, and that's the second biggest segment. So that's hurting our market's upward journey. But I don't think we have reached the top for this year. We'll see better levels again in this market. It's more a consolidation phase that we are going through.
Are you of that camp, the camp which you're referring to, who would like to participate more wholeheartedly at lower levels and would wait it out a bit for froth to get clean a little bit? Are you also from that camp?
No, I'm fully invested, Ajay, because you can't ever time it
Right.
to the T. So you know, I would say that it's foolhardy waiting for that froth to clear and all those things because you have a structural story going for India. You have an India macro which is booming and which will continue to do very well. So the time is to put money into India, but the foreign investors are of different segments and they have different issues on their portfolios, which are leading to some outflows. The good news is that the domestics have stepped up, and as Uday Kotak's clip you were playing, and that's something Ajay he used to say even in the 90s that we are a nation of savers and not investors. Now he's changed to saying that savers are getting converted into investors, and that's your SIPs, that's your insurance flows, that's your provident fund and pension flows, which are a huge conglomeration of domestic money which is holding up these markets, and that will change the hue of this market to be very little dependent on the foreign flows. I think that's the big change that's coming over the next 3 years, where domestic institutions will own a broader segment, a broader proportion of the market, and the FI outflows will not have that big an influence on the market.
Specific question to you, because you're somebody who look at the global macros as well. What has happened is that one of the under-owned space of the market, which has recently last 6-8 months started doing very well, is pharmas, and understandably so. Look at Dr. Reddy's guidance for last 2 quarters and commentary, and Lupin as well. So these stocks moved up. Sun Pharma almost 1600 now. So the participation has happened in them, and the guidance for few quarters is strong. Is it prudent to take some money off here? Because the another section of the market says if you don't book profit now and market starts believing Trump coming back with Atmanirbharta for US coming in, because Trump is more about make in America, all of that. The pharma lobby the pharma exporters could get it on the chin. So would you book profit on that point or no?
There is always noise in the election year on the pharma costs. And if you look at the medical costs of the US as a nation at about $850 billion, it's the highest in the world. Maybe England hospitalization might be more expensive, or European hospitalization, but they have a very strong welfare state where everybody gets covered. But Big Pharma is a big lobby, and it's a juicy lobby to attack for all politicians. But on the ground, very little gets done. So I don't see a very big threat from that. But yes, sentiment will definitely get impacted over the next 6 months as the US elections roll out. And there will be a lot of talk about this. In fact, Big Pharma is challenging the prescription of generics by US doctors. So a lot of suits are on that as well, which directly impacts our generic players. But it's a very vast market. And the good news is that over the last 3-4 years, the US revenues got so depressed and the margins have got so compressed that the pharma generic players started looking quite attractive. So it is a fundamental shift after a lot of time that the pharma players are getting back. There will be the FDA focus. They don't like the fact that India has so many pharma alternatives available at a much cheaper cost. And unfortunately, Indian companies don't invest in the compliances. If you read the 483s, Ajay, you will be aghast that data has been changed. And now there is so much software available which can track the archives down to the beginning of that data. And still, I was reading a recent 483. It said that microbiological precautions were not taken. You're making medicines, for God's sake, and you are risking contamination in that. Works in third world countries will not work in an American milieu. That is the only downside, and you don't know when the next 483 will hit you.
Sure.
That's why this will not grow into a very big segment because of the hanging sword of compliance.
Yeah, hopefully they get their house in order and at least manage to keep the basics in terms of the hygiene given the industry that they're in. But I wanted to shift the conversation away from pharma into the oil marketing companies because BPCL, HPCL, IOCL, all of these stocks have lost quite a bit from the highs of the day and trading close to the lowest point. Nuresh, what's the view on these stocks? Is this dip a buying opportunity?
So ideally, one would need a, correction of 10-15% and then start looking at it. So if you look at BPCL, the stock had made a high around 680, 690. We are just getting closer to a 10% correction. The last swing low for the stock is closer to 580. So that's where one wants to keep a stop loss. So closer to 600, 605. That is where BPCL could be a fresh trade. But overall, time for some pause in names which have gone up 100% over the last 4 months in the PSC segment, because we cannot continue on this speed forever. So OMCs and a lot of oil and gas names correcting 15% top from the top would be pretty normal, and that's the price point you would want to again look at it.
Zee Entertainment has actually increased its fall. It's now seeing a cut of almost 15%. And the other one that I'm watching out for is, of course, on the gaining side, Mrs. Bector's Food, where the volume has picked up. Kunal, on the charts, track these two names.
Yeah, of course. For Zee Entertainment, I think it's a no trade stock. The stock has this tendency of getting to the F&O ban. The trends are a lot, in fact, very erratic for Zee Entertainment, and the swing is more than 30-40% at one point of time. So it's very futile as an exercise to try and look out for panic zones to try and exit the stock or look to create fresh longs. In fact, yesterday, if I'm not wrong, the stock had given a breakout about 200 levels on an intraday basis, failed to sustain, and today the stock is back again to its previous swing lows, closer to the 160-65 mark for Zee Entertainment. So it's a stock which we clearly would suggest to avoid. The other stock which you mentioned, Vector Foods, that's a classical chart in the making, because I think 3 days back or last 1 week, the stock had fallen down some 20% from 1200 to 1000, 1020 approximately. Today is more of a recovery move for Bector Foods. So, ideally we look out for 50% retracement for such kind of stocks, and that retracement level for Bector Foods is around the 1140 mark. So, I'll wait out for maybe another 3% rally for the stock. If it breaks past about 1140 levels, that's a very strong confirmation that a bottom is in place, and we could be looking at the stock hitting back about the 1240, 1250 mark pretty soon.
Okay, let's see whether that happens or not. But just to that point on Z Entertainment, Kunal says it's in a no trade zone. But Mr. Bagga, what's your view on it? Because, I mean, Paytm wasn't a similar story, but that stock had also seen quite a bit of dropping. But at some level, the buying emerged. And if you look at the last 5 trading session or 4 trading session, that stock has been locked on upper circuit consistently with 100% delivery thereabouts. What's your view on Paytm, Z Entertainment, these volatile names?
See, when you have a fantastic market like India with so many growth stories and good, clean stories, I would say avoid the compliance stories. And wherever there's a whiff of any governance issue, it might not be worthwhile. On Paytm, the fact is that you have much more buyers than there are sellers. So that is a reality, and I can't explain that reality. I don't, talk about individual stocks. I won't say whether to buy or sell, but clearly, wherever there is a compliance whiff also, I think you are best served by sticking to the, straight and narrow. You want to take that kind of risk on small caps, that's okay. On the 30 stock portfolio, you say, okay, 2 or 5% I will risk on a couple of small cap stocks. But in a center of plate or large companies, to see governance issues or compliance issues, that becomes very big red flag. And especially in India, when you have so many alternatives, why go down that route? Let the penny pickers stand before the oncoming trains and try to pick up the pennies. You should not join them.
On that note, Mr. Bagga, we let you go. Thanks so much for making time and speaking with us.